battle between centralization and decentralization is on, and with that, the rise of DeFi, decentralized finance, is coming. But what does it really mean and what does it entail? Let's find out. What up guys, this is Mark Denker here, and today we're talking about DeFi, decentralized finance. But before we do that, let's just take a step back and talk about traditional finance, the financial industry that has grown since centuries ago and become this behemoth of a intermediary or multiple intermediaries being toll collectors really between borrowers and lenders, people who needs money and people with money, acting as an intermediary, putting them together. So when you see the financial industry today, they really take a heavy cut of the transaction, being this intermediary. If you have money, you might get, if you're lucky, you will get 1% interest rate. And if you need money, if you have credit card debt, a mortgage, a loan, business loan, whatever it is, you will not borrow at 1%. I haven't seen that for many years, and I don't think any of you, if you have, please comment below because I would like to know where it is. But basically, the difference between the interest from lenders to borrowers is really what the bank is making money on. So that is a bit of a problem when they take such a big cut. For example, when central banks all over the world, they lower the interest rate, basically the interest rate that banks are borrowing at. You don't see that discount coming to you when you are borrowing for your small business loan or credit card debt or whatever it is. You just don't see that. The interest rate keeps staying at a very high level, up to 25%. I've heard friends and family having, which is insane when you think about how little you get if you have money and you put it in the bank. Even today, in many countries, you get negative interest rate because of inflation. So that is obviously a problem, and that's why, in a nutshell, decentralized finance, DeFi, is on the rise. It seems like the new black or the new normal or whatever you call it. It's super hyped these days. But really, what is it all about? Ultimately, DeFi is powered by the blockchain. It allows people with assets, Bitcoin or whatever cryptocurrency assets, to deposit that into a smart contract typically. So instead of having a bank as an intermediary, you rely on a smart contract, which is open, running on a blockchain, so it's distributed. Everyone can see the code in a smart contract. It's open source, and hence it becomes trustless. So you deposit money on a smart contract, and then borrowers on the other side, they will be able to get money from the smart contract, committing to paying a certain amount of interest. Why is that clever? Well, it's clever because it takes out the intermediary. You won't have to have a bank that takes a heavy cut of the transaction. Basically, whatever the borrower pays in interest is what the lender receives, unless in the smart contract there is some fee calculated into the smart contract. So that is obviously huge potential. It's interesting to see where DeFi is going. There's a lot of different types of institutions and initiatives coming out which leverage DeFi. There's obviously the more pure implementation of DeFi, where it's literally you as an individual depositing into a smart contract, and then somebody else on the other side taking advantage of the smart contract and committing to paying this fee. This is a little more niche and nascent technology right now. It's quite technical. It's not for the average Joe out there. But then there are other institutions leveraging DeFi options like this. A prominent example that I would like to highlight is Celsius Network, which is not DeFi in sort of the way you define DeFi, because when you sign up on Celsius and you deposit, so you basically lend money, they still hold the private key and become a centralized institution, so they are a toll collector. But the difference between Celsius Network in particular and traditional banks is that instead of collecting the far majority of the income or the interest spread, they actually only collect 20% of that and then giving 80% to whoever deposited money, the lenders of the crypto assets. So that is obviously a big change from what we know in traditional banking. There are other types of platforms that makes it easy to simply deposit money, deposit cryptocurrency, and then for other borrowers on the other side to lend via something like Celsius Network. That's a more centralized approach to DeFi. There are more decentralized approaches like compounds could be mentioned. So it will be interesting to follow how DeFi will evolve. I can already say there are other initiatives that leverage blockchain in a better way and a bigger way, I would say, in ensuring that users who have cryptocurrency assets and deposit money, they will still be able to hold their private key or their passphrases. So that is something interesting to follow in the DeFi and distributed finance space. So let me know what you guys think. If you think I missed something that is worth mentioning within the whole DeFi and decentralization space, feel free to comment below. And until then, guys, I will see you for the next one.